today's newsletter, we talk about how we can never assume that the taxman will not be able to get information on us. So whenever I have a client who says things like, well, how will the taxman ever know? I get worried because increasingly the taxman can know more and more about what we're doing. So as a taxpayer, I always tell people you need to be comfortable that if all of your financial information is available to the tax authority, that you're able to support and justify and defend it. So a couple of areas where information flows happen between tax authorities are as follows. The first one is FATCA and CRS. So FATCA and CRS are essentially two branches of the same tree. FATCA is the US version, and CRS, Common Reporting Standards, is what most of the other countries in the world apply. And essentially, this is a list of information that tax authorities are obliged to compile every year on everyone doing business in their country and to share it with the other countries that have signed up to the Common Reporting Standard, which is almost every country in the world. So it often works at a bank level. So your bank is required to get all its account holders to fill out this form, which gives a lot of information about what type of entity they have, what the entity does, who it's transacting with, and then the banks are obliged to compile them and give them to the revenue authority in country, and they share it with all of the other countries. So there's a lot of information there that you can get through your bank account. The second one is through exchange of information treaties. So these are specific bilateral agreements between countries where they agree to share information on companies that are resident in those countries with the purpose of disclosing tax relevant information between different bodies. Now, you might wonder why kind of tax favorable jurisdictions sign up to these treaties, but it's because they want to show that they're compliant with best practice globally. And generally, if as a tax jurisdiction, you try to be secretive about the people who are doing business there, it will reflect badly on you globally and can lead to grey listing or blacklisting or problems with the ATF. So that's why most jurisdictions in the world do sign up to CRS, FATCA, and now to exchange of information provisions. And again, that entitles the tax authorities in that country to give a lot of information on all the people who are resident there, all of the companies who are resident there, and share it with all of the relevant jurisdictions who they've entered into those agreements with. The next one is the exchange of information provisions under double taxation agreements. So a normal double taxation agreement, which is entered into between two countries, also usually has a clause that enables the tax authorities to share information when requested. And a lot of information can be given there. The next one is, of course, particularly in Africa, the links between the exchange control and or the central banks and the tax authority. So in South Africa, the South African Reserve Bank controls or has oversight of all financial flows from South African tax control residents, whether individuals or companies, and that's administered by the authorized dealers, which are essentially the South African banks. And there is significant sharing of that information with SARS. So that's another one to be aware of. And as a final point, many tax jurisdictions, particularly across Africa, which surprises some people, are getting very clued up on the use of AI to comb through all of the masses of data they can get through the various channels I've described earlier to identify key risk areas or risky clients. So in a nutshell, you should assume that if the taxman wants to find out everything about your business or your personal transactions, he will be able to. So don't ever assume that you can hide things from the taxman. Those days are long gone.